There we go. Good evening, everybody. It is Friday, the 23rd of, Monday, the 23rd of February. And we're so lucky to be working from our front room and having the amazing Rob Sherwood and his associate Neil talk to us about the great benefits of tax in this industry. So Rob's going to have a chat with us, do a little presentation, and then we'll do questions at the end if anything hasn't been answered for you, and you can unmute yourselves at the end. So I'll pass everything over to you, Rob.
Okay, thank you. This is the #1 Zoom presentation from DSL to your group, which is great. So easy. What I'm going to do is to move into a series of slides shortly, and I'll talk over the slides, and that will explain a lot of the things you have to do at the beginning of your business with Arbonne, right through that, and claiming expenses and how we can turn those into tax refunds, all that kind of stuff. And then at the very end, you'll get details of how you contact us afterwards, and then I can take questions happily until the cows come home. The presentation itself will take somewhere between 20 and 30 minutes. I'm not going to rush it because it'll give you time to take notes as I go through, which I thought you'd like to be able to do. So we'll now move over to the slides. I shall disappear and I'll start talking you over them. Hang on a sec till we're ready. Few technical things going on here.
Okay, can you see the PowerPoint presentation? Brilliant. Okay, so
okay, right then. Okay, so I want you to look at the message at the bottom of this first slide, which reads, "You build your business and let us look after the tax man." And that's really the message that we give to everybody, because that's our particular area of responsibility. And we don't want you worrying too much about deadline dates, accounts, tax returns. Far more important it is that you get on and build a business and leave the tax man to us. So that's the message that I really want you to take away from this evening. Okay, so I just want to move on to another slide. We'll have a little technical thing here. Okay, now just a bit about who we are, so you understand why I'm making this presentation. I've always been, well, I've been qualified as an accountant many years ago, but I came across the direct selling industry in 1993 when I joined with a business colleague, an American company, fresh over from the States into the UK. I had no idea what direct selling was all about, network marketing. But we joined this company, we thought it was interesting, and in the next 3 to 4 years, we actually built a very successful business all over Europe. We had about 3,500 to 4,000 people in our organization at the end. Now, I tell you that because it means I understand the industry really well. I've had all the ups and all the downs, just like everybody else does, but in building a group up and so forth. So I understand that. Of course, being an accountant, I also understand tax and accounts. What happened was, in back end of 1996, early 97, the company we were with went belly up. And then everybody was going to different companies, all that kind of stuff. But I suddenly realized, in fact, I wanted to do what I'm doing now. So I went to the Direct Selling Association. Your company is a major member of that, and formed DSL Accounting with their support so that I could address the situation of people who were struggling to cope with tax and accounts. And I kept meeting these when I was building my group, and I used to lecture to my company and so forth and so on, and realized that there was a gap to be filled. So that's really what happened 15, 16 years ago, created DSL Accounting. And what we've been doing ever since then, 3 things really. We have an office where we process everybody's tax returns and do our accounting functions from, which is in Warwickshire, near Leamington Spa. We then have, we create inexpensive products that really make a difference. I'll describe 1 or 2 of those later on. And then thirdly, what we do is to go out and lecture and teach and train people, which is in effect what I'm going to do this evening. And so those 3 aspects of the business, and I hope that combining, they will help you with the tax and accounting side, which no one really enjoys, but it's unfortunately, being self-employed, it's like an obligation you have to have. Okay, so let's move on with what happens at the very beginning. Now, what we've decided to do is to make it easy for you to understand. We've created or reinvented 3 R's. You remember at school you had reading, writing, and arithmetic. Well, now we've created register, collect the receipts, and then turn these into a tax refund wherever we can. I'd like to say at this point, it's very, very unlikely that anybody in their first year or two, having joined Arbonne, will pay any tax. Much, much more likely are you to get a tax refund of tax you've already been paying. I'll explain to that more when I come to that particular area. So, the registration process. Now, this is all about telling the Inland Revenue that you are now self-employed. It has to be done, but it's quite a generous time lag in order to do it. You've actually got until the 5th of October following the end of the tax year in which you join Arbonne. So if anybody has joined from April 2014 through to now, this is part of the 14 to 15 tax year, you've got until the 5th of October next, coming up in 8 months' time, whatever it is, in order to register your business. So it's very generous time, you haven't got to worry about it. But I always say, as soon as you really signed up with Arbonne and you want to make a go of it, then you register with the tax people. There are 3 ways of doing it. You can either fill in some paper forms, and this is where we offer a free service that we could email you the forms, you complete them, email them back, and then we file them on your behalf. And that means we've checked them out so we know that they're right. If you want to pick up a telephone and just have a conversation with an official at the tax office, you can go through that and then he can take the details down. Or you can register online. There's a bit simple process of doing it online. There are different forms if you are joining as a partnership or as a sole trader. From a tax point of view, try and remember that a partnership can bear fruit in terms of tax, and I'll describe that more later on. Otherwise, if you haven't got a business partner or spouse or anybody like that, then you register as a sole trader. If you are already registered in any other capacity with the revenue already, you don't have to register again by being now part of Arbonne. What happens is that the revenue puts you onto their books for tax purposes and will send you tax returns in future. And from your point of view, you will get what's known as a UTR, a unique tax reference number, and that you need in order to file any tax returns in future. So once you've got your UTR, you're up and away. So that's the registration process. It's not difficult. The forms are not difficult. It's name, address, national insurance number, typical things like that. So they're not difficult to do. But as I said, if you want to use our free service via forms, then what will happen is when you'll see our address at the end of this presentation, all you would have to do is to email Rebecca or Becky, who is my PA, and she will handle your forms and she'll email them out to you. So that's the registration process. Not difficult, and I recommend you get it done as soon as you conveniently can once you've got involved with Arbonne. Now let's look at receipts. And this basically means these are all the expenses that you can claim. So, and there are a heck of a lot now being self-employed. Being self-employed and working from home gives rise to an awful lot as a self-employed person, whereas if your employer asks you to work from home, there's usually just about a £4 a week allowance that you can claim, and that's about it. But being self-employed, it's a lot more. Let's go through the list, starting off on the top left-hand side, the products. You're buying your products basically for 3 reasons. You're buying them because from time to time you'll be selling them to a brand new customer, and obviously the purchase of the product is a properly allowed expense. You'll be buying them because you want people to have them as samples to try out. You know, you've got your golden bag, and so they'll try out and get to use the products, like the products, and then will join the company probably. And the third reason you buy them is because you want to use them yourself, because you want to be the best advert for the company possible. You want to be wearing the products, looking great, etc., etc. Now, the tax allowances are different in that what you have, when you buy product to sell on, you make a full claim. When you buy products to give away as samples, you make a full claim. That's a marketing expense. But strictly speaking, if you buy products only to use yourself, you can't claim for that part. However, what we did, we realized that this was going to be a problem years ago, called the tribunal with the tax people, and at the meeting established the principle that once a product was open for sampling purposes, you could then finish that product off, apply it to you, whatever you want, and then claim the whole cost as a sample. So in other words, if there's a product you want to use, as a bloke I want to use some shaving, aftershave stuff, all I have to do would be to open it up, offer it round as samples first, and then I can finish it off and claim the whole cost as a sample. Now, I mean, that sounds too good to be true. So what I always say to people is never say that you don't have some products exclusively for sample purposes. Always have, exclusively for own use purposes. You must have something to show the revenue that you're playing fair, if you like. But basically, most of your products you can be claimed for tax. Training costs, any courses you go on, any books that you buy, all that kind of stuff, that's all allowed for tax. The business is built around courses. You can go on motivational type courses. They don't have to be strictly bond product courses or training for building a business. Things like Tony Robbins, you may have heard of, his kind of courses, they're all allowed for tax purposes. This is what we do in this industry. And certainly any books you buy, any tapes or thing also would be fully allowed. Home expenses is the third item on the list, and that's really because that's where your office is going to be. You're working from home at the start. Later on, you might have an office you go to, but right now it's your home. So we can claim some home expenses. The one we don't claim for is mortgage interest for owning your home, only because I think the revenue probably will give you the allowance, but I'm always a bit concerned that when you sell your home, make a profit, some of that might be subject to tax. So we stick to what I call the running costs, things like council tax. If you rent your home, the rent, because obviously there's no sale involved there, all forms of heat and light, maybe some extra content insurance because you might increase your contents insurance when you're holding some stock at home, that kind of stuff. And you might redecorate, renovate a room at home to be used as an office. So all those expenses pooled together at the end of the year, you can claim a proportion of, and the proportion is based on adding up the numbers of rooms where the tax people would accept that work is usually done. For that reason, they exclude kitchen, bathroom, loos, passages, and so forth. So you're adding up really bedrooms and reception rooms downstairs. So if you have a typical home of 5 rooms, 3 bedrooms, a dining room and a lounge, that's 5 rooms, you'll then claim 1/5, 20% of those running costs. And the other comment to make on a house is never, if you ever get asked the question, say that one room is exclusively set aside for business purposes. Again, there might be a small charge to tax on that proportion when the house is sold. So that's your home expenses. That's great. You're paying them anyhow in normal life, and now they become partially tax deductible. Motor expenses, that's a big area too of cost. You can claim motor expenses one of 2 ways. You can either log all the business miles you do, and since your home is now your office, the minute the car starts a journey, you're on business, log all the business miles, and then claim 45 pence a mile for the first 10,000, 25 pence a mile after that, and an extra 5 pence per passenger that you take in the car. So if you go a journey with you and one other, it's then 50 pence a mile, 45 plus 5. But if you fill the car, 3 passengers, that's 60 pence a mile for that one journey. Okay. If you don't want to record the miles, or I should say as well, if, for example, you're going on a journey, you're going to go meet some downline and whatever, and you're dropping kids off at school on the way, to me, it's the whole journey that counts. The fact you've dropped children off at school is only part of the whole journey, so you claim the whole of that particular journey. If you don't want to claim motor expense, if you don't want to claim by recording miles, then instead what you do is you keep all the bills and receipts of all the expenses, not just fuel, but things like insurance, tax, repairs, MOTs, all that stuff, and come to the end of the year and then claim a proportion of those based on really the fraction that your business miles bears to your total miles. You needn't do that as accurately as the mileage claim, but something like either a half or a quarter or a third, whatever is a reasonable estimate for that. And if you go that particular route, you can also add in an allowance based on the cost of the car, 8% or 18%, depending on how green a car it is based on its CO2 emission. There's a table to show you what that is. So you've got the mileage versus the bills and receipts plus an allowance on the cost. Basically, the watershed is that we say that 10,000 miles and more, probably the mileage pays off because you've got 10,000 miles, £4,500 to claim, 20,000 miles, and we have plenty of clients to do that. It's like over £7,000 a claim. Whereas if you're a small mileage driver, so that's a couple of thousand of local miles a year, at 45 pence if you go the mileage route, you're only going to have a £900 claim. And that really would hardly cover tax and insurance these days. So best to have, if it's a low mileage, you claim the bills and receipts, keep all of those. High mileage drivers keep a lot of the miles. Now, what we suggest you do for the first year or two, while we're getting used to the system, you actually keep both. Keep all the bills and keep the miles, and we'll help you determine which to use. You can change the method whenever you change your car. You can't change every tax year if it suits you. So that's that. Travel costs, any public transport. I mean, Arbonne is an international company. In due course, you may travel, particularly to the States for conventions and stuff. So all the airfares would be allowed, and plus, of course, the hotel costs when you arrive at the far end for your convention. It's best to keep a note of all the convention events that happen, just in case the Inland Revenue would like to suggest that it was a holiday you took with a bit of work thrown in, rather than obviously the other way around, because you might take a few days off at the back end of the convention to travel a bit. Don't claim for that, but certainly claim for the flights to and fro a foreign country. And within the UK, of course, you're traveling around, trains and taxis and things like that are fine. Hotel bills too are fine in the UK, provided there's a meeting involved. I always say a meeting, but it needn't be a big one like the annual convention in Liverpool like last year. It could be a small meeting, as long as it's a business meeting. It's not like taking a few mates down to the pub and discussing Arbonne. It's a properly set up meeting to meet people, the sideline, upline, downline, or even customers to talk about the whole thing. That's a grey area because the Inland Revenue are always trying to say, well, if you buy people coffees, teas, even a light lunch, it's like entertainment. That would be disallowed for tax. But if it's a genuine meeting involved, I tend to make the claim on the basis that I can support it by explaining how the business works. Let me just digress for a second, because what we're talking about here is a system of tax called self-assessment. And that's really what it is. The revenue only see a tax return at the end of the tax year. They don't see anything else at that stage. And by and large, they'll simply tick the box and say, yes, this is the tax you owe. That's the tax we're going to pay you back. Then they've got a 12-month window to go back and examine it more, ask more questions, and see if the expenses are justified. It'll probably never happen to you. It's great. I mean, we've got, I don't know, 1,500, 2,000 tax returns we're doing every year, and we probably get a dozen queries. And the only reason you get a query is that somebody has been making the same expenses claim for year after year, with the income apparently not moving at all. So eventually someone's going to say, hang on, let's have a look at this particular case. The golden rules are always have a bill or receipt for any expense item you're going to claim. If you don't get given one, make one up for yourself and put the date and the amount or whatever and put that in your system. And the other thing is always be able to justify the business purpose of an expense, such as I had a coffee with a downline, blah, blah, blah. That's a motor in the travel section, and that's probably one of the biggest expenses you're going to have. Telephone and the internet, you'll start off using your home line for business purposes, obviously. But then as you go into more advanced stages, you might bring in dedicated phone lines, internet lines. So at the beginning, you'll claim a proportion of your phone costs. We usually work on an 80-20 split, 80% business, 20% private, and the same goes for any mobile, because we know how often these phones become used. And if you think that 90-10 is a better proportion, well, then claim that. Advertising, website costs, 100% claims for anything like that. Post and stationery, again, letterheads, business cards, 100% claim for all of those. Office equipment, you're buying laptops, PCs, iPads, anything like that, that's a full claim because you've got £25,000 a year now to spend on that kind of stuff. If you wanted to, but obviously you won't. but it's all claimable straight away. And then finally, I put in here family and casual wages. It's a bit of a sort of brings a smile to people's faces when I explain what I mean, which is really using teenage children to record, perhaps keep phone messages, maybe go out and do some errands for the business or something like that. And say you're paying them some pocket money, well, that's fine, because we've actually had these agreed with the revenue. The reasons were that the client had kept a notebook recording every week how much they paid out to little Johnny. And the other thing was that the revenue always asks the question, is the child old enough to do what you say? So if your little Johnny is 13 or 14 years old, absolutely fine to make the claim. But if he's lying in his cradle at 13 or 14 months, then preferably don't. So overall, you know, if you play fair with the revenue, you're not going to have a problem. If you bear those two things in mind, a bill or receipt for everything, and you can justify the thing as an office business expense, you really won't have a problem. Because the revenue are not looking for problems. They actually came and did a complete review on the Direct Selling Association's business about a couple of years ago. And because we work closely with the DSA, we were called in to meet the revenue and to advise them on various things as they were looking into people's affairs. I think they expected to find people earning loads and loads of money and paying no tax. We said to them, you won't find that. And I said, if they did exist, we would know them. We're bound to know them. But I said, what you will find is loads of people who haven't properly registered because they didn't know what to do. But in most cases, they'll be entitled to a tax refund rather than having to pay you anything. Anyhow, after about a couple of years, they went away. And when they did their report to show how much money they'd actually raised from the industry, as opposed to all the other people they're looking at, it was like 0.03% or something. So we've honestly got a clean bill of health from the tax people. It's fine. Let's see now if we can turn whatever you've got now into a tax refund. Okay, so I recommend that we adopt 31st of March as a year end, and it sometimes means that your first period is less than a year. Like you join in September, it's 6 months. If you join in December, it's only 3 months possibly to go. Now, the only thing I would say about this is that if you join our bond, say in March, that's your first month, it might well be worth waiting until April, the start of the next tax year, to register. It saves you filing a tax return just for 1 month when not much was happening. So bear that in mind as well. Now, in order to get a tax refund, the two requirements are these. First of all, loads and loads and loads of expenses, in fact, more expenses than income. And at the early stages, that's absolutely more likely to be the case. It'd be very unusual if somebody in their first 12 months with our bond makes a profit, in other words, has more income coming in from commission and retail selling than expenses. You've seen the list of expenses. They apply from day one, whereas you've got to build up a business, you've got to build up customers, you've got to start to recruit downline, and that takes a while, obviously. So the odds are you're going to have more expenses than income. Okay. And the other condition of getting a tax refund is you've already been paying tax. In other words, you've got a job probably, you may have a pension, all of which are taxed at source. Now, the better thing is that it doesn't have to be in the same year. Normally it would be. Normally you'd say, in my first year with our bond, I've got a surplus of expenses over income, and I've got a job, and I'm paying so much PAYE. But say you've come out of a job to come into our bond, we can look back 3 years before on your bond to see what tax was being paid then. And then we can go into that period and look at the tax that was paid to make our refund. Because what we're doing in effect is to create this surplus of expenses that becomes another tax allowance, if you like. We feed that into the PAYE system. It hasn't been there before, so clearly the tax you've paid will be too much, and the result will be a refund. I said that the partnership can boost the refund, and that's because if you go into our bond as a partnership and you do your calculations, you get your expenses, you get the surplus of expenses worked out, you can allocate that to whichever partner it suits the best. The revenue have no choice. It doesn't have to be 50-50, anything like that. So obviously what you're going to do is to allocate the surplus of expenses against the person who's paying more tax outside the business or at a higher rate. If you've got a 40% taxpayer as one of the partners instead of a 20%, far better that they have the benefit of the expenses because they'll have twice the amount of the refund. So that's well worth remembering. If there is no refund possible, in other words, you've never worked, you've not got a partner, there's no way of allocating that to anybody else, you've got the surplus of expenses, well, all is not lost. You can't get a refund because you haven't paid any tax. But then the expenses get carried forwards, there's no cut-off point, so when you would normally pay tax after, say, a couple of years when you're into profit, you actually have got a nice wedge of expenses coming forward from the past to offset that particular year and to postpone the day when you start to pay tax. So that is probably the most important slide I've been putting up this evening. It just shows how nobody really will pay tax at the beginning, and if provided you've kept your expenses. Now, even I talked to somebody tonight earlier, and she was saying that she started this year but probably hasn't kept a record of expenses properly. Well, because we know the business so well, we can usually create those by going back to credit card statements, to bank statements. With your knowledge of how your home expenses are run and so forth, we can put together a picture of very accurate expense claims in your first year if you haven't been keeping the records. But now you've seen what it's all about, you can tell your new recruits and your downline they should be keeping records from day one and how they too will be much more likely to get refunds than paying anything. So let's just go on a bit. This says you can do as much or as little as you choose. That's working with us as your accountants. We work in two ways. We have a shoebox method, which is really literally where we do everything. You just simply keep all the bills and receipts and the bank statements and the credit card statements and anything from our BOM, whack them into a shoebox, whatever it is, plastic bag, and dump them on our doorstep literally every 12 months. And from there, we will prepare accounts for you and do a tax return and get you the refund if we possibly can. If you want to do a bit of work yourself and reduce the fee in the process, we operate an Excel spreadsheet system which will email to you the spreadsheet. It's all headed up with all the right expense headings and income headings. You complete the fields and you email it back to us and we start off. That is our base record, if you like. We don't then need the bills and the receipts. We'll work from that basis. But either way, we end up with accounts and a tax return. We agree those with you before they're submitted, obviously. We make sure that all the accounts are there. On the spreadsheet, it doesn't a question we simply accept your figures without looking at them. We don't. We look at them and, okay, again, because we know the business pretty well, we'll know if a particular area of expenses looks a bit light, and we'll come back to you with questions. Advice is totally free. You don't have to be a client, actually, to phone us, to email us, to ask questions. We really want to make sure everybody gets the right answers and so forth. So those are the three things there. Now, products. I mentioned inexpensive and valuable products. Yeah, we have two of these. We have a starter kit, which is what we call the Bible to the industry. It's got everything I'm talking about this evening. It's got chapters on registration, on expenses, on refunds, and a lot more beside it, telling you about what's coming around the corner, VAT one day, and all that kind of stuff. And at the back end of it, you'll find an audio CD, which is the Q&A. You're asking the questions and I'm giving the answers. And that costs you £10. And again, that's a thing you can claim for tax. I've also written a book called Tax Without Tears, which is a bit more generic. It's really for anybody who's self-employed and works from home. And again, it's an invaluable product in terms of what it tells you in terms of how you claim expenses and how the business works. It's actually in the book, you've got things like writing a business plan if you want to raise some money and all that kind of stuff. So between those two, honestly, they really are useful products to have. And they're only £10 each. And they really are, I'm not just saying it myself, I'm saying it, I know they're worth it because it gives you, if you haven't got any knowledge and you want to have a reference point, they really do work. So that's a bit more about us. And then as we go on forwards, we have this long-term commitment to support you. I mean, we do look after some people at the very top end of our BOM, as well as the beginning. So it's great. We've got people at the beginning who are getting tax refunds. Then you move through the system, and then you get to the stage when you're profitable but not wanting to pay too much tax, so we make sure that all expenses are in place. VAT registration will come later on, but you've got to be having income of about 7,000 a month before you need to worry about that registration. What we say is that when your monthly income, if you're monitoring it, comes to about £6,000 a month, 72,000 a year, let us know and we'll help you decide when that registration should be there. But when you get to that, honestly, it's a doddle. It's just one more step on the way. It doesn't really, and there's a way of registering it which actually gives you some cash flow advantage, would you believe? And then you get serious tax planning. Again, our top clients with Arbonne have limited companies. So your income comes to you, all the income from Arbonne goes into the company, same kind of expenses, but you take your money out as dividends or tax-free salaries and all sorts of wonderful stuff we can come up with when you get to that stage. That's really good. Training. This is a thing I want to mention, is that we have training, obviously like this, but also in my office, we've got a boardroom where we can put 8 people in, and we can give them a 2-hour training, cost nothing. You just ring up Rebecca or Becky, my PA, make your date with her, come over, and I always say, come over in 2 cars, 8 people, 4 in a car, and don't forget that's 60 pence a mile. And but that's seriously, that's good. And it's you can ask as many questions you like. We can actually fill the application forms in, the registration forms, and then at the same time if you wanted us to. So all that is really setting you up properly in your tax and accounting stuff. So in summary, we've got the products I mentioned. If you want to go on the phone when you've got our details to speak to Rebecca and order those, that's great. The services, our offices are, as I said, Leamington Spa, not a million miles from where you are this evening, some of you. The training you know about, and the advice and support line you know about as well. So finally, I always put these last 2 slides on. HMRC, the dreaded letters of Her Majesty's Revenue and Customs, in my office speak. Instead, we call it, how is my refund coming along, which is far more important. So my final slide going up there now, I'll leave that on because that is giving you details. I'll just leave it on for a few minutes so you've got time to write those down. So you've got Rebecca Coleman, as my sales and marketing manager and PA, DSL Accounting, we even put ground floor, Warwick House, Banbury Road, Southam, CV 47 2PT. And an email to Rebecca is rebecca@dsla.biz. Our phone number is 01926 422 872. And if you want to go onto our website, www.dslaccounting.co.uk. So, leaving that on for a second more while you, and I'll come off the slides and I'll reappear, and then I'll take any questions anybody wants to ask. I hope a lot of them will have been answered in that process, but any more, absolutely fine by me. Yep. Okay. Are we back on?
Yeah, we can see you.
Could you follow that? Could you see that quite well?
Yeah, no, it was really clear. Yeah, it was brilliant. Very informative. Thank you, Rob.
So,
Danny, you're going to read out the questions that have come through on the chat.
Yeah, okay. Are you ready for questions, Rob?
Yeah, fine, carry on.
Okay, so I'll just read out the names of the people so they can ask their own questions. So first of all, I've got Jenna Evans. If you're still on, Jenna, do you want to unmute yourself and ask your question?
Okay.
Hi, my question was, you know, evening trainings, sometimes I have to get babysitters. Are we able to claim back for them?
Right, okay. Now, babysitting has always been a bone of contention because some people, quite rightly, can't go somewhere because unless they get a babysitter, they can't go out. Now, if the babysitter comes to your home, as opposed to you dropping your child off at a babysitter's home, there is a possibility here, provided you can have them doing some work whilst they're looking after your baby's children. In other words, they become not just a babysitter, they're actually doing something for the business. Which means that if you drop your children off at someone else's home, that can't happen. But if they come to your home, if you can prove, if you like, afterwards, that they were doing something, I don't know, some bookwork, some whatever job they could have been doing whilst they were doing their babysitting, then I think a proportion of that babysitting could be claimed.
Thank you.
But you'd have to, as I said, you'd have really to get them to do something that you could say that was a definite job.
They can sort out all my samples and that things then.
Well, look after your samples. What? Sorry.
They can label up my samples while they're babysitting.
Yeah, I mean, seriously, if there was a specific job like that they could do, and you said that's what they came for, absolutely fine. Yeah.
Oh,
and then what I would do, I wouldn't claim the whole of the cost. I'd be, as I said, be reasonable with the revenue. They'll be reasonable with you. I'd claim a proportion of it. Say you claim half, something like that. Perfectly fair.
Brilliant. Okay, the next person was Sam Ball.
Okay.
Hello.
Hiya.
Thanks very much for that, Rob, by the way. That was really, really helpful. I just want to ask, I lease my car. Am I able to claim back on that at all?
Right, if you lease your car, you've got two choices. The leasing goes in as like one of the bills or receipts. But if you go the mileage route, you don't claim the leasing. You leave that, you just claim the whole thing on miles. And so what you need to do is do your sums, because the leasing, if you lease your car, 15% of that cost is deemed to be private, so you can claim 85% of the leasing as part of your bills and receipts in normal circumstances. So you might find that leasing, in your case, might be a better way if added to the rest of the bills and receipts rather than the mileage route. Because if you go the mileage route, the only other expense you can ever claim is interest on car finance. If you're buying your car on finance, not leasing, if you're buying it on finance, HP, the interest part of the monthly repayments can be claimed separately to your claim on mileage. That's the only case when a separate expense can be claimed apart from mileage. Okay?
Thank you.
And then we had Nikki and Darren Desmond.
Mine's been answered really because it was the partnership question, so I just need to listen to that again because I still was a bit confused.
Okay, all right. Partnership for taxes are really, really useless. What happens is this: if you work as a partnership, if you register as a partnership, well, we do get a number of people who've joined as a sole trader. They get to hear about the tax advantages of the partnership, and they want to bring their partner into the business, which you can do. All you would then do is to re-register from the original date as a partnership, or if it's in the previous tax year, you register from the beginning of the current tax year as a partnership. That's the first thing. The tax advantages are this: you take the expenses, and on the assumption that there are more expenses than income in a particular year, your first year or so, you've got a surplus of expenses. You can then allocate that total to either of the partners. It doesn't have to be split 50-50 or anything else. And so if one of the partners is a high rate taxpayer, obviously it benefits them to have the benefit of the surplus of expenses to get a higher tax refund, okay? And so that's what you would do. And then you're perfectly allowed in the next year or the year after that, as you go into profit, to allocate it the other way round and to allocate the profit to the partner earning less money or no money outside the business, and you keep the tax bill as low as possible.
So you're still submitting two separate tax returns?
Yeah, I'll tell you what you do. There are three in a partnership. There are three tax returns. There's a tax return for the partnership itself, the business, which is now a partnership. And in that tax return, you put down the whole of the expenses and the income and whatever. And then you have a section where you allocate it between the two partners. So you can have, or three partners, you can have as many as you like. So say you've got a loss, we call it a loss, in other words, more expensive than income, of £10,000. You then go into, in the same form, you'll find a section which you allocate that £10,000 between the partners. And if one of the partners is this high rate taxpayer, he will have a £10,000 figure in his section, and the other person will have nil. So all the surplus of expenses has gone to one person. And then you have your 2 individual tax returns, and you record on those tax returns whatever the partnership result was going to be. So it's 3 tax returns, 1 for the partnership and 1 each for the partners. Now, the only thing that the revenue introduced some time ago was a 10-hour rule. They said any partner who wanted to get what's called sideways loss relief, in other words, the benefit of the surplus of expenses, must be able to say that they work for at least 10 hours a week in the business. Well, the great thing about direct selling, marketing, is that happens because it's all evenings, it's weekends. Who's to say you're not talking about things the whole time? That rule was actually brought in, and I can tell you, nothing to do with direct selling companies. It was people who worked 9-to-5 jobs, and in that 9-to-5 period, they also said they had a self-employment which allowed them to make a claim, and that's when the revenue sat on that. But in our case, it's all evenings, weekends, so it doesn't exist. So 3 forms for a partnership, but the benefit of that is that you can allocate, as I said, the surplus of expenses to create a bigger tax refund, and then you go into profit, you do it the other way round. And again, and the revenue have given us the license to do that. All these rules are actually introduced. You wouldn't possibly remember, you weren't around then. Well, you might have been. Margaret Thatcher, remember Margaret Thatcher?
Yeah.
1988, she set out a whole lot of tax rules to encourage people to become successful entrepreneurs. And she had this thing about, at the beginning, getting all the possibilities for getting tax refunds from the business to put money back into it and blah, 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 and the partnership thing. I mean, she created the possibilities, and all we're doing is using the existing rules that exist, and long may they last, because it does encourage people to get into self-employment. Really good.
And how does that fit into your pricing structure then, Rob?
Right, okay.
Is there a separate cost for
Yeah, we do. What we do, in April, we've got an office meeting tomorrow, funnily enough, and we're discussing fees for the tax year 14 to 15, about to end. And we have a menu of charges from people, we call them bronze, silver, gold, and blah, blah, blah. And basically the bronze one is when we give people a spreadsheet program, because they have to do some of the work then, and there'll be 1 for a partnership, 1 for a sole trader. And then the silver one is when we have a shoebox, and there'll be 1 price for sole trader, 1 for partnership. And by and large, the partnership is about £60 or £70 more than the other one, because we have the extra tax returns to do.
Yeah, okay.
If you want to call, you saw Rebecca, in the end of this month, we will be able to send you, first of all, it'll be like a checklist. We have a checklist system, and the checklist is designed to give you the information that we need in order to complete your tax return and accounts. And at the back end of the checklist will be our register of charges, of fees. So in April, that'll be available to you.
Okay, and just
I mean,
one last thing, Rob. Just one last thing. Is it usual, and this is a bit of a tricky question to ask, but do you find that more often than not, doing a tax return with you, that people will save money that they've not realised they could save?
Yes, we say that, and that's why people come to us. A, they don't want the hassle of doing a tax return, and B, they probably wouldn't claim as much as we would on their behalf. But we do know the extra bits and pieces. They might not be unsure of what to claim. I think it's a fair claim. But and the other way I would say to you is that the tax refunds, normally at the beginning, we will take our fee out of the refund to make it as painless as possible. In other words, in the first year or two, we can almost, provided you meet the criteria, in other words, you've got a job and you're paying some tax, or you did in the past, and so we can be sure there's bound to be a refund coming. What we will then do is to take our fee out of the refund, get the revenue to send us the refund check, and then at the same day, literally, we'll actually put the difference into your bank account and keep our fee back. So it's kind of makes it quite simple. And I mean, I would say 60 or 70% of our fees are paid this way, because it's easy for people to do. Okay. But yeah, apply to us, come in early January. And the fees are not big. I mean, last year, let's try to remember now what they were. For example, the lowest fee was £350 for a sole trader doing a spreadsheet.
Okay.
And if the same sole trader did a shoebox, I think the fee was £490 or something like that. So
Okay.
about £150 to save if you do the spreadsheet. But as I said, another thing what I often recommend is that the first year we do the shoebox, so you'll see what we've done, and then after that, if you feel more confident, then you can do the spreadsheet.
Yeah, yeah.
Okay.
Thank you. Sorry to have you.
Okay.
We had Tony Adesso as well with a question.
Okay.
Mine was just, do you have to earn a certain amount to start saving your receipts, or should you start now?
No. The fact is that what I always get a bit upset about the fact that people are often told by uplines or sidelines or whatever not to worry about tax and accounts until you're making a profit. So those people will come to us after 2 or 3 years and say, you know, I'm now profitable, I'd like to stop my tax. And I will say to them, well, why didn't you come 2 years ago and get a refund? And they were saying, well, we were told not to worry about tax until we were actually profitable. Now, that's a great shame because it costs them nothing to start to collect refund receipts and expenses right from the word go. Once they've registered with the tax people, they can start to record and claim and keep back all these receipts. We will turn into, if they have the salary position, which most of them do have, into a tax refund, because there is a time scale after which the refunds won't be able to be claimed. And so, God, if I wanted, you know, it makes common sense to me to register and get the refund if at all possible. Does that help?
Yes, thank you.
Okay.
And then there was Jennifer Walton.
I am.
Get on, Jen. Okay.
Can I just interject one other thing, one other bit of advice generally? If you want to use us, then can I suggest that once 31st of March is over, and you get your P60 from work in April, maybe May, that's about the time that you could start putting things together and get them across to us. Because what happens is, what happened this year as usual, is that we do about 30% of our work in January. It's absolutely crazy. It's mad. We did it. We had 100% of people's tax returns signed off. But to me, if you were going to get a tax refund, I'd want it as soon as possible. And if you were going to be paying tax, I'd want as much notice as possible. In other words, for us to tell you in January that in 2 weeks' time you've got a tax bill is not the best thing. And if you're going to get a refund, I'd want the refund in July or June or July rather than having it in November, December, January. So honestly, once the end of the tax year is finished, 31st of March, you've got your P60 from work with all the details giving us the ability to do tax refund. Do please get in touch at that stage rather than leaving it. I know it's human nature, everybody leaves it, but it's in your interest not to, if I might say. Okay.
Okay, I'll read out Jennifer's. She said, I already do a tax return for my rental. Would they include this at the same time?
For tax return for what?
A rental, she's put.
Rental.
Oh yes, we do that as part of the deal. Yes, what we do, we'll do it within our fee structure. We do the accounts for the business. We do a tax return which includes things like salaries and all that kind of stuff, dividend income, anything else that's extra. And with a rental income, yes, we do that as well. But what we normally would do, we'd make a small charge per property. I think it was about £60 per property or something like that. Because we do those, and that goes into a separate part of the tax return. But yes, absolutely, we do that as part of the job. And we even take over if people have another self-employed business and they want us to do that, we'll do that as well. But we can, obviously for that, if it's a complete separate thing, often we find if you have another business at the side and you've joined Arbonne, sometimes we can amalgamate the businesses. If it was some kind of a therapy business or beautician or something like that, instead of having a business for Arbonne and a business for the beautician, we actually put it all into one.
Brilliant. That's great.
Okay.
Casey had a question as well.
Hi, Rob. I'm a director of my own company, and I have a company car, so I don't actually have any vehicle expenses because it's a car dealership. So would it be better for me to claim the mileage system? Would I be able to?
Yeah. If you log the mileage in your case and claim on the mileage basis, yes, that's the way to do it for you.
Okay, thank you.
Okay.
Did anyone else have a question? That was everything that was on the chat.
Can I ask another question? It's really.
Yeah.
Oh
Yeah.
God, Nikki's back on.
Rob, I actually used to know this, and I just don't understand it now. But you know, when we're actually talking about a claim,
Yeah.
so did you say like a computer would be a full claim?
Yeah, a computer, you've got a ceiling of £25,000 from the end of this month in the new tax year to claim. Right now, you can actually spend £500,000, but they're dropping it down to £25,000. And they call that plant and machinery. Well, plant and machinery in our industry means office equipment, obviously.
Okay. And what I don't actually understand is, what is a claim? What is the financial thing? So you've got a profit. Is it that you actually get the full value or just a percentage?
No. The way you make up a set of accounts is this. You've got your income coming in from commission and anything else.
Yeah.
And then you've got all the claims or expenses, like the total of your travel expenses, the total of your post and station, blah, 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 blah. And then in addition to that, you can also claim on buying office equipment.
Yeah.
And you can make a claim for 100% of the cost. So it's like having an extra bit of postal stationery. It just, because it's what they call a plant and machinery, it goes into a different part of the tax return, but it has the same effect. So if you're buying a laptop for £1,000, you claim £1,000.
And so basically, if you earn £2,000 and then you put in £1,000 for a computer, then your profit would be £1,000.
Correct.
And you would literally be writing off that £1,000 computer.
Correct. Absolutely correct.
Right.
Yeah.
That's what I couldn't remember. I did all of this at university, and I just was like, it seemed too good to be true.
That's fine. I mean, in theory, but it would never happen. In theory, if you sold the computer a year later, it's now sitting in your books, as it were, for nil value. And you sold it for £1,000. You've actually made a profit of £1,000, and the next year you pay tax on the profit. But you would never do that, so forget that. It just goes in. Yes, you forget about it. You claim the £1,000 and forget about it.
Does it depreciate?
No. In tax terms, it gets written off in year one.
Right. Okay.
I can remember. You obviously you've done some accounting stuff, depreciation.
Yeah, but I can't remember it. I just remember what I can't remember. Thank you.
Okay.
Oh, Rob, I've just got another quick one, actually, if I could. You mentioned council tax. Is it a percentage of your council tax?
Yeah, what you do, you put council tax, heat and light, extra insurance, rent into a bucket, if you like, and then you claim the same proportion of all of those together. Remember I said you counted up the number of bedrooms and you claim so if you've got 5 rooms in the home, you claim 20% of all of that bundle of expenses. Now you said you were director, is it not of your own company? Is it director of a motor company?
Car dealership, yeah. It's a family business.
Yeah, it's not your own business though.
Well, I'm a shareholder.
Oh, you're a shareholder, right. Now all I was saying was sometimes if it's your own business, and this might be to other people listening, and you have an Arbonne business, I sometimes say it's better to put the Arbonne business into the limited company. Because if they have a limited company on the side, which is doing something else, whatever, and they join Arbonne, and our bond is going to have this situation of more expenses than income, they can't offset that against the profit of their company, because the company is kind of ring-fenced. So the way to gain tax benefit in that situation is actually to put our bond inside their limited company, because anybody who has a limited company of their own can have in it as many income streams as they want to have. So in that particular case, but no, if you are a director of another company which is not yours, then it's a different situation.
Yeah.
Okay.
Thank you.
Cheers.
Was there anything else from anyone? Okay, so basically, Rob, so if most of the team now are ready to move forward with their tax, you would say the first thing tomorrow, we register on your first slide that you showed us, that form, and contact you with our receipts, expenses from when we joined.
Speak to Rebecca, because if you've joined in the current tax year, 14 to 15, from April 14 onwards, wait until the end of March, because that's another month of expenses. We don't want them yet. We want them when the whole year is complete.
Right.
So go to the end of March. Contact Rebecca by all means now if you're not registered with the tax people, and we can see to that registration process. But for accounts purposes, wait till the end of March, and also wait, if you wanted to, till you get your P60 from work, which would be April probably, if you're working still. And then, again, contact Rebecca and send them in whatever form you like, when people post them in or they use couriers, whatever.
Okay.
Or even drop by. I mean, if anybody sort of lives within the short distance of Bar, pop in.
Okay. When do we pay you? Is it at the beginning or at the end of the process?
Sorry?
When do we pay you, or does it come?
Oh, when you pay. Oh, right. If you can afford it, and you're sending your shoebox in, you send a deposit of £150 with the shoe. But if you can't afford it, we don't worry. And then we wait. You wait until we finish the work. And if we're going to get a refund, we get the refund. If you've got to pay some tax, we'll tell you that, and then we'll send you a bill. Now, otherwise, there are some people who prefer to pay on a monthly standing order. And we do that over a 10-month period, starting at the end of May, round to the following February. So if you'd rather keep your tax refund in its entirety and pay us on a standing order basis, that's fine. Again, contact Rebecca and she'll set that up with you.
That's great. And how long does it normally take for the tax refund to come in? Do you know?
Well, the tax people, I mean, we get your shoebox, we do the accounts, do the tax return. From the moment that we file the tax return with a refund claim, they're very quick. I mean, it's within a couple of weeks you'll get your refund.
Oh, wow.
I know. That's why I say, I mean, I keep saying it. March is the end of the tax year. Get your P60, get it to us in May, June, and you'll have your refund before July's finished. Super.
That's brilliant. It's really great.
Rob, just me again, sorry. I already do a tax return, so I don't need to register again, do I?
If you've got a UTR, haven't you?
Yeah.
You're a tax reference, but you've never been self-employed before, have you? Because
No.
you're employed. No, well, you do actually. Although it sounds funny, you have to register as being self-employed, and what will happen is on the registration papers, it'll ask you one question: is what is do you have a UTR? And if it's and if so, give us the number. And that's where they'll tie the records back to your existing tax returns. But you do have the registration.
Jonathan.
Yep.
Jonathan, I just rang up and they did it over the phone, because I've been doing self-assessments because I've got a rental, and it was just literally a phone call.
Yeah, you can do that. You pick up the phone. You're quite right.
And Rob, there is one more thing. We were at Claire Shaw's house and we were discussing the whole partnership thing. Yeah. And one of the girls explained that she was under the...
Claire Shaw was the first person I ever met in our bomb.
Oh, Claire was?
Yeah.
She's lovely, isn't she?
Yes.
And one of the girls was explaining that she was under the impression that it still is even if you're in a partnership, it's still two Arbonne businesses. So
no, one.
would it be one Mercedes?
You see, if you have, you can have, and we have partners with 2 IDs, right?
Yeah. Right,
So
yeah.
they have separate IDs with our bond.
Yeah.
For tax purposes, they have one business as a partnership. We have plenty of clients like that. You don't. You either if you have 2 people in our bond, they've got to have their own IDs. You can't have.
Yeah.
But
so do you think that there would be 2 Mercedes? Do you see what I mean?
Yes.
Do you see what I mean?
Okay, if that's the case, then you can have 2 Mercedes in the same partner. You can have 2 Mercedes in the same partnership for tax purposes. It doesn't matter. You can have 2. Often we have partnership with 2 cars for tax purposes. That's absolutely normal. Okay, no, it's fine.
So
Rob,
it is,
sorry.
go on, Candy. Am I explaining myself properly?
Yeah.
I understand exactly what you're saying. You've got 2 people, 2 IDs, each one is qualified for a Mercedes.
Yeah.
But you're thinking they can't be a partnership for tax. They have to be 2 separate businesses. No, for tax purposes, they can amalgamate and be one business. And it's perfectly okay for a partnership with 2 partners to have a claim on 2 cars.
Yeah, okay.
That's fine.
2 income streams.
Yeah, exactly.
Yeah, okay. Sorry.
Are you getting
No.
There are some people in our bond that have got 1 ID number, but they are a couple, but they've only got 1 ID number. Is that what you're thinking of, Nikki?
No, I think it was Kyan that was explaining. Do you remember? And it was exactly what she's just said. She was under the impression that what Rob just said was how it was.
Okay.
And I just wanted to clarify.
Yes, I mean, obviously you can join our bond as a partnership, the 2 of you together with 1 ID. But some people don't. Some people do join separately, and then they amalgamate the businesses.
Yeah.
For tax purposes, they can do that.
And make more money.
Of course.
Can I just ask, Rob? I've just done my tax return, so I left it to the last minute, and I did get a fairly hefty refund, which was great. So if I now do it sort of end of the tax year, so March 31st, if I do it immediately then, are the revenue going to now pay me again, or are they going to wait?
No, the one you've just done was for the year finishing March 2014. The one you'll do next will be the March 2015. Different tax year, different refund, different everything.
Yeah.
No, I mean, just all my advice is get it earlier. Do it earlier.
It just paid for Vegas though, so that's good.
Okay.
Rob, can I ask a question very quickly?
Yep.
I've been self-employed for 3 years. Do I have to ring up Revenue and Customs and tell them that I'm with Arbon now as well? Or do I just do it on my tax return?
You've been self-employed for 3 years.
Yeah.
Been doing a self-employed tax return for 3 years.
Yeah.
No, you don't have to register again for Arbon. Simply on your next tax return, Arbon will feature as an extra stream of income.
Yeah, that's what I thought. Thank you.
No, that's fine.
Anyone else? I think you've about.
I'd like to ask a question. Sorry.
Okay.
I know we spoke before, but I would really like to gain a big tax refund. As you know, I was in the 40% tax bracket before I stopped working. So how do I try and get the biggest refund? How do I try and get the most
in your
back?
case, I know we talked before, you've given up work, but you've got P60s from in the 3 years prior to joining Arbon. Because you joined in September, didn't you, 2014?
Yeah.
Yep. And so your first period with Arbon for tax purposes is from September 2014 to the end of March 2015, end of next month. And in that period, you're going to have this surplus of expenses. What's then going to happen is that we'll look back. In your case, you won't have a salary in 2014 to 15, but you will have had it in the years prior to that. And so what we would want is your P60s from those years, and we go back to the earliest one first and look what was paid in terms of tax in that year. And we're talking of 2014-15, So we've got 13, 14, 12, 13. We're looking in 11, 12 to see what your situation was in 2011, 12. And the nice thing is, when it comes to doing your tax return in 2015 to 16, I mean, by then you might be very profitable. But if you weren't, we've then got another chance to look back at 12, 13, what tax you were paying then. And so there's quite a bit of refunds possible coming your way as we go forward.
And I can still claim that back even though I've not really been keeping the receipts and things like that?
Well, again, I had you in mind when we were talking about that, and you said you hadn't got the receipts now, but we would have to help you and talk through from credit card statements and bank statements and from other things. I mean, mileage, you might be able to come up with a mileage figure for your car. I mean, we could talk about that because what would happen really is between now and the end of March, got another month of the tax year to go, this particular tax period, you could keep your mileage from March, and we could make an assumption that that was typical of the previous 6 months or something like that. We could come up with something that was sensible.
So would it probably be best for myself, is that to do the shoebox method and you basically
I
come
honestly,
up with it?
in your case, I think if you work with us to do the shoebox, you'll get a better deal because we will help you create the expenses that you need, yeah.
And then your fee will just come out my refund, so we'll kind of both be win-win.
Absolutely. Yeah, absolutely. Yes, it will. That's the way we work. We try to make it as painless as possible. We very rarely get people complaining about our fees. I do know that.
I think money I'm not going to have anyway, so might as well.
Okay.
Yeah. Hi, Rob. It's Jonathan again.
Hi, John.
Just a quick one. Just on the car mileage. I mean, my car, I change my car very regularly just through the nature of my job. So,
right.
How is it just a matter of me keeping a log of the mileages?
Yeah, I mean, if you did, in your case, yes, you keep changing cars. If you do some kind of a spreadsheet every week or day, or make some notes and put it into a spreadsheet, that would do fine. I mean, I've never had. We certainly wouldn't challenge the mileage claim, and I've never had the revenue challenge the mileage claim yet. I mean, how can they? What can they say? I mean, this guy does these miles, he does these miles, you know. So yeah, that's fine.
Okay, thank you.
Okay.
With me as well, Rob, I think I'm going to go ahead with the same as Gemma and do the shoebox thing. I joined in June last year, and my husband's got his own separate ID number, and he obviously has been working for the past 3 years and longer, but I haven't. So I'm assuming we could do a partnership claim, give you the past 3 years P60s that he will earn, and prove on our bank statements like what we've been paying out for our bond since we've both joined, and then claim a refund that way.
Yeah, I would think so. I mean, that's yes. Are you registered with the tax people?
No, but I'm going to.
Okay, so you register as a partnership, and then I met your husband, didn't I, when we came over to Oakham?
I think you're thinking of Zoe Allen's husband, John.
Oh, okay, right, okay. Anyhow, no, that's fine. If he's got his P60s going back, register yourself as a partnership last June. And then, yes, then his income comes into play when we're talking about the tax refunds. Absolutely.
Yeah.
I think this is a great way of doing work. I'm so pleased that we're doing this with you guys because I'm going to do this all bloody time now. It's so easy.
Yeah.
Isn't it? It's fun. Yeah.
Danny, maybe we could have a road trip to Leamington Spa.
Is that where you're from, Rob?
Yeah.
Well,
yeah, it's not far.
We're just outside Leamington Spa. That's right.
We're a little town called Southam, which is on the road just between Leamington and Banbury. From you guys, when I've been to Oakham, it doesn't take me long. It takes me just over an hour, I think. That's all. Nothing.
And it's really nice town. It's lovely.
You know it?
Yeah, I've been through it a few times.
Okay. Yeah, it's what they call a regency town, don't they? Queen Victoria.
Very lovely.
Queen Victoria came and went in the springs or something. Baths.
Rob, hi, it's Zoe. Sorry, we're confusing you because we're on different. I'm down as John. I just thought I better ask a question that normally does get asked, and I'm surprised it hasn't already. It's about the thing that comes up the most is how is it going to affect my benefits? And when, are the government going to stop paying me my benefits?
Yeah,
when does that happen?
Okay, right, now then. Benefits are coming under, there's a whole lot of new stuff coming into benefits called universal credit. And At the moment, you've got a whole series of different benefits and tax credits. Really, being self-employed and running an RBON business has little or no impact on any of those until such time as your RBON business becomes profitable. When people are on benefit and they worry about joining a company like RBON, we tell them three things. We tell them to go to the benefit office and say, I'm thinking of joining a business where I have to be small and part-time, working from home. I won't be putting in more than 16 hours a week, and I'm making no profit. And those three things at the moment seem to work, and the benefit office don't normally do anything other than say, well, keep in touch, we want to see you every few months, we want to see your figures, blah, blah, blah. Particularly housing benefit. If people on that, we have to supply on their behalf regular figures to the local authorities. Now, and that's a system we've got now. Universal credit, which you may have heard about, is a system that's putting everything into one monthly payment. All tax credits, all benefits are going into one system. And we are fearful of how the system's going to work. And we've actually lobbied with the Direct Selling Association against the government introducing it. Because for self-employed people, it's going to be quite a burden. They've got to, in order to get their benefit every month, it's assessed and they're given a one payment amount. They've got to do monthly accounts. If they're a fortnight late, they have to wait till the accounts are in to get the benefit. If they're a month late, they get nothing for the month they are late for. It's a nightmare. And then there are minimum amounts of income that are assumed to be in place, whether or not the person is actually earning that. So the benefit's already been reduced, if you like, by an assumption that your RBON income is X when it probably is X minus. So that's not around yet. But I know that when it's fully in operation, in about 2017, they reckon, it's going to be a nightmare. Right now, the benefit system's okay and has little impact on a business like RBON. But it, sure as eggs are eggs, is going to, unless it changes. Now, funnily enough, the Labour Party have said if they win the election, they'll actually either scrap it or have the whole thing under review. But of course, the Tories want it in because they've created it. In theory, it sounds quite a good idea. It's just that for self-employed people, for employed people, it's fine because the employer does all the work, provides the figures. It's the self-employed person who's going to have a nightmare getting his figures together. And we're trying to think of how we can help, because it's monthly accounting rather than annual accounting. It's bad enough doing annual accounts. Monthly accounts are going to be a nightmare. So I don't know, but it's okay right now, but it's not going to be, I don't think, in 2 or 3 years' time. We'll see.
Okay, thanks, Rob. But that's great. Those three things are really helpful for them to tell the benefits office now.
I mean, we'll see. We're going to monitor it, and as things develop, we will be reporting to various companies on how we see it going. Because I do a lot of work with the Direct Selling Association on this, and I sort of report to the companies. They can hopefully pass the messages down.
Yeah.
Okay.
Thank you.
Really great. So just to clarify that with the benefits, I'm really glad that Zoe asked that, because that does come up a lot. So say if you earn, say, £200 a month from your RBON business, but your business expenses were, say, £250 a month when you've accounted everything that you went over in your slide. Technically, yes, you're earning £200 a month and that check is real, that money is real, but your business actually isn't in profit. So at that stage, it will not affect your benefits.
Correct, but that you would have to explain that situation to the benefit office. That's for sure, and that's what I mean. It's to do with profit. It's not to do with income. That's the difference. It's very important that they explain that to the benefit office. And by and large, I've always said to people, if you go to the benefit office and the person who you talk to doesn't understand what you're talking about, or is difficult, I've always said, take a name and a number, call us, and we'll call that person. But we've never had to so far, so I'm assuming that those three vital things about small business working from home, no profit, and what's the other one?
16 hours.
That's right, 16 hours. Now, I'll tell you what has happened, and it's been reminded recently by a woman who, many years ago, we used to get tax refunds for her. She wasn't in our bond, in a different company. But because she hadn't gone to the benefit office and explained that she was going to do this, and she was receiving disability benefit, she got into real hot water. Nothing to do with the tax refunds, but because she hadn't agreed with the benefit office that she was entitled to work at all. So I mean, people must go and tell the benefit office. Don't just sort of sweep that under the carpet and get on doing our bond on the side. They must let the benefit office know. Otherwise, they could be in trouble by not doing that. Okay.
Yeah.
But again, if you have somebody who's on a benefit who wants to call me and speak to me, I'm happy to take the call and go through the same thing with them, because sometimes I know they're very frightened and scared about losing a benefit, and I'd like to be able to reassure them that right now it's okay. But as I said, I'm very wary of the new system which is coming in, and I don't like it at all, but there you go. Okay?
Yeah.
Great, thank you.
Yeah.
Brilliant. I think that's everything, unless there's any last questions.
Nikki said no, so we're all right. If Nikki's got no more questions, we're okay.
Thank you very much.
Well, this was so easy to set up. If you want to do it again at some future time, let me know.
Yeah.
Hope to see. I hope that we'll get back to if you have your big event in Liverpool again in September. I hope we'll be there.
It's Birmingham, a bit closer to you, Rob.
Oh, is it? Oh,
yeah,
good.
5th and 6th of September.
5th and 6th of September. Whereabouts in Birmingham, do you know?
No, we don't. It's gonna. They did it in the middle last time, but it was too small, so I don't know yet. I just know it's Birmingham.
When you say the 5th and 6th, I'm looking up now. Oh yes, that's fine. Oh, you see, I come back on holiday on the 4th of September, just in time to come to it. Oh, good.
Claire Shaw told me it was Birmingham, so that's all I know. So.
Okay. She didn't want to. Anyhow, seriously, anybody who listened, get on to Rebecca if you want to in the morning or the next few days. And that was really good. I really enjoyed that. Thank you very much.
Yeah.
Brilliant. Thank you.
Thank you very much.
Okay. Thank you, Rob. Thank you. We'll see you soon. We'll see you in Leamington Spa soon. Bye.
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 I can put that